Hi guys, welcome back to my channel. We're going to go over today's price action. It's Tuesday, 25th November. We're going to have a run through of what price did today, how it moved, breakdowns of price action, etc., etc. Let's get into it. It's going to be a quick one because it's late and I'm going to go to bed. How about that? So we opened up here, got this big opening range gap in line with several new day opening gaps, which very tasty for longs today. If you call them, we've got these relative equal highs because they are relative equal, because we've got a high here and then we've got a lower high just next to it. That means it is relatively equal and a high draw of liquidity for price to target, especially being in line with key levels such as the opening range gap low quadrant or the opening range gap low, etc., etc. So today, price displays down. As you can see here, we hit the midpoint of this fair value gap, continued lower. That's your institutional order flow entry model. The midpoint completely respected. Takes us lower to the newly formed low. Just misses out on Friday's high, which personally I wanted to see get wicked through today and then move higher. But yeah, institutional order flow. Clear example there. Midpoint takes newly formed low, moves lower. Uh, Moving on. So yeah, we just miss out on Friday's high. Then we immediately displace. But where do we get displaced to? First um first presented fair value gap in the session. Clear draw today. Immediately rallies to it, and I mean, look at this. What time? What time? 9:50. 9:50. What do we do? Straight thick size candles to the first fair value gap in the session. But also just bodies completely respecting midpoint of it, moves back lower, back into the range. Then we come out of the macro and it's very, very, very choppy within here. Displace out of the range, straight back to the first fair value gap, and midpoints respected, bodies respecting it, slightly mohawks through it, takes this buy side, and then moves back down. But where does it move back down to? Unfilled fair value gap, which can do the damage, but bodily closures, respecting the midpoint, sends us back higher, back past through these newly formed highs, opening range gap low, just misses out on them relative equal highs in the uplink range gap low quadrant, but yeah, and then we come back down. It's quite choppy today in certain areas, but we did hit certain objectives, like the algorithm did what it needed to do, but out of that it was very choppy. But look, if you extend all this out, extend the first fair value gap out, and see when price just continues to respect it. So push up, opening range gap low, move down, push up, bodies just close outside of it, move back down. But look, algorithmically, look at that wick, right on the midpoint, moves lower, takes out newly formed low, moves up again, misses the midpoint, takes the newly formed low, pushes back through, and back. And what do we take? Once we push through this pink box, which is the first fair value gap, what do we do? Straight to the relative equal highs here. And what do we wick? The opening range gap lower quadrant, which is a key level, and you should always be marking them out. Don't just mark the midpoints out, you've got to mark the 25 and 75% parts of Fibonacci. So, yeah, we take them and then we move back down. Look at their bodies, closing that side fair value gap, first fair value gap. And what do? We go back higher, back to take that newly formed higher, back to the opening range low quadrant. I mean, it's just entries within here. But once you understand how the algorithm moves and the key levels you should mark out, it becomes pretty easy, to be honest. Yeah, a bit of chop work within here, and then we displace through, draw towards the nude opening gap. But look at the reaction these candles have off the nude opening gap and the midpoint of the opening range gap. So a lot of work done within there. Price continues up higher, respect fair value gaps, order blocks, wick, wick through, upper quadrant, opening range gap, wicks through, wicks past all these nude opening gap levels. Also the opening range higher, which is that red line. Continue, go through Monday's higher. But again, look, algorithmically, look how much work price action done within this level. The wicks on the body just sort of floating around it. Moving on, again, we draw back down to the new day opening gaps and the opening range gap higher. Look at that, look. Body closure, new day opening gap low. Wick, new day opening gap low, opening gap, range gap higher. I mean, look at this body here, this one. 1446 candle. High, new day opening gap higher. Low, new day opening gap low. Someone please tell me it ain't an algorithm, because you've got to start trade. You've got to mark these levels out and actually take reprice like I'm doing now every single day. That's how you learn. Again, fair value gap within P level, wicks it, displacement, relative equal highs. 1, 2, there's your relative equal highs. Where do we draw towards? After wicking through that, straight to there. And then yeah, we just continue to go higher, just miss out on the new wick opening gap low. And yeah, we're just sort of chopping around now because we've got 7 minutes left of the session, so yeah, I wouldn't expect a lot of volume or any more targets to be reached. But yeah, objectively, look, all these key levels getting interacted with today. But yeah, I hope you enjoyed and learned a few things. But thank you for watching, and I'll see you tomorrow.